The management today is being represented by Mr. R.P. Batra, Senior GM Finance and Accounts, and Mr. Vinay Kalia, GM Marketing. I'll now hand over the call to Mr. Kalia for his initial remarks, post which we'll open up the floor for Q&A. Over to you, sir.
Good evening and welcome you all to the Q4 and FY18 conference call on Engineers India. I'll just summarize the results highlights for you, and then we can open the forum for queries. The company has registered a turnover of 1788 crores during FY17-18, which is an increase of 23% over the last year's turnover of rupees 1449 crores. We have registered growth in both the segments. In the consulting segment, the turnover is 1379 crores as against rupees 1165 crores in the previous year, which is an increase of 18% since last year. In turnkey segment, the turnover for FY17-18 is rupees 408 crores. Again, there is an increase of 44% as compared to rupees 284 crores last year. Likewise, we have registered operating profit of rupees 389 crores as against rupees 277 crores in the previous financial year, which shows a growth of around 40%. Operating margins registered during the year is 22% as against 19% in the previous year. The PAT for the current fiscal is, which is FY17-18, is rupees 378 crores as against rupees 325 crores in previous year, an increase of 16%. We have paid an interim dividend of rupees 2.5 per share, and Board of Directors have also recommended a final dividend of rupees 1.5 per share, which is subject to the approval of shareholders, totaling to a dividend of rupees 4 per share for FY17-18. This is compared to a dividend, the total annual dividend of rupees 3 per share last year. The company has also secured order inflows of rupees 1660 crores in consulting and 479 in EPC, totaling to 2140 crores. Major orders secured during the year is the HMEL polymer addition project of over 1000 crores and 2 EPC projects from ONGC worth 235 crores and 244 crores. The order book position as on 31st March stands at 7,873 crores compared to 7,762 crores last year. The mix is quite similar to the mix of last year. It's for 53% consulting and 47% EPC. Now I leave the floor open for queries you may have on the results and the business outlook. We can take forward from here, Bhumika.
Sure, thank you very much. We will now begin with the question and answer session. Participants who wish to ask questions may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants who wish to ask questions may press star and 1 on the touchtone telephone. The first question is from the line of Aditya Sanghi from ADD Capital. Please go ahead.
Yes, good afternoon. I only had one question with regard to your proposed investments in the fertilizer sector. In one of the earlier calls in Q1, it was noted that you would be investing close to 340 crores in revival of 4 fertilizer units, with an additional investment prospects of another 200 to 250 crores. Just wanted to get an update on those plans.
So we have already made the investments to the tune of over 200 crores in the fertilizer complex. The project is also being built by us. It is to be commissioned by December 2018. And as per the original agreement between the partners, we were to rope in another equity partner. So if we are able to find another equity partner, we would not be making any further investments. Otherwise, further investments will be made by the existing partners.
And if you can also kindly elaborate on the new bids that you are looking to make for revival of additional units, which was mentioned as between 200 to 250 crores.
We are not currently making any further bids in India for revival of fertilizer complexes. We are not bidding any further projects in India. We are only looking at consulting assignments from other fertilizer companies.
Great, thank you. Just one last question on this point. Is that a stated potential strategy for the company that you may look at asset investments in the future as well? Because that was not what you had followed in the past for the last many years.
We are only looking at investments for some strategic purposes, like if I want to get into a new business area where I need some competencies. In case of fertilizers, we needed some PTR. So this was a precondition that we will invest in this project, provided the project will be executed by EIL as an EPCM consultant. We needed this PTR for getting qualified for fertilizer projects in India and overseas also, because last fertilizer complexes that we had done were about 15-20 years ago. So fortunately, with this commissioning of this plant, we will have a PTR in India. Also, with the support of this project, we have already got 3 projects in international markets. They have been completed. So we are also looking at another project in fertilizer complex in overseas based on the PTRs we have developed recently. So it was a strategic reason to invest in this project. Otherwise, we are not looking at investments per se for putting our funds.
And what would be the exit plan from this eventually?
I didn't get you, sir. Can you repeat the question?
Sorry, I just wanted to know what would be the potential exit from this investment.
We are not looking at exit from this because we had done our due diligence and the IRRs were good while we invested. It was a precondition. So it's not that the IRRs were not good and still we were investing just for getting a PTR.
Understood. Thank you very much. Appreciate the answer.
Yeah.
Thank you. Before we take the next question, a reminder to our participants that you may press star and 1 to join the question queue. Next question is from Rohit Gupta, who's an individual investor. Please go ahead.
Sir, can you elaborate what are the international possible orders that you are looking at currently?
International orders, we are looking at some potential orders from Middle East, majorly Abu Dhabi region, Oman, Bahrain and Kuwait. For last 2 years, because of the fall in the crude oil prices, most of the clients in the Middle East had curtailed their investments in greenfields and brownfields. They were only going for revamp assignments. Of late, as the prices have revived, and these clients have started giving us expression of interest for major and mega assignments as well. Now with the PTR of Dangote and the greenfield projects we are doing in India, as of now we do get qualified for these projects. So we are now opening up our sales initiatives in these countries, and fortunately we have been qualified for a number of major assignments as a PMC consultant.
And sir, what can be the potential order inflow from this? Do we have a view on that, like in the next?
Currently, I can't say because the markets only last 4 to 5 months they have started giving us an indication of revival in the Middle East sector. Till last 2 years, they were not making any investments. Only EOIs they have now announced, and they have called us also, and they have empaneled us also in 2 or 3 places. So it will take another 5 to 6 months before you actually see realization of those EOIs. So this year might still be muted, but next year can show some good potential returns in terms of, say, an average project could be in the range of $25 to $50 million that we could secure in these regions.
And sir, what is the status of the Barmer project, initially, like in the Q3 call, you mentioned that you were expecting to secure that order in this quarter.
We are negotiating and finalizing the terms with HPCL, but yes, pre-project activities have also been initiated by client, and we are executing pre-project works, which is basically site enabling works. So works have started, but the main contract signing is taking time because the terms are being negotiated. We are hopeful that another 1.5 months' time we should be able to negotiate the main contract. Since it was getting delayed, pre-project works have been awarded to us.
That, but sir, there is enough visibility that this will fructify. There is no...
As of now, yes, because we have started the works for site enabling at site, and the contract is also being concluded.
And sir, is there any progress on the mega refinery at Ratnagiri? That project seems to have run into some issues. Will you be able to share some view on that?
See, from a technical side, we are progressing as per schedule and targets given to us. As far as finalization of DFR, market study, licensor selection, all the activities that are assigned to us, we are working on it as per schedule. As far as the acquisition of land and investments are concerned, I think the investors, the owners are the best people to give you a response on that. But yes, it is a very big investment, so these issues might come up.
Yes, that. Thanks, sir. That's all from my side.
Thank you. Next question is from Ruchi Khare from Kotak Securities. Please go ahead.
Good evening, sir. Thanks for taking my question. Sir, couple of questions from my side. First is about the HPCL Barmer project. So, is it true that strategically we'll be sort of taking orders only through the consulting route, or it could be a mix of LSTK also, like it happened in Vizag?
First of all, it's the client's priority. My preference would be taking more of consulting because of the strong bottom lines that I get. But I am expecting that the client would prefer both because they are negotiating on both with us.
And sir, roughly this would be executable over what time frame?
4 years. For such a greenfield, you can consider 4 years.
Okay. And sir, again, coming back to the fertilizer piece, so these fertilizer projects which you are expanding currently, so these also typically follow the consulting route, or again it's or it might be a mix of consulting or EPC, like going ahead?
See, you have to make a choice. It's a conflict of interest. You can't do both, as you very well know. So our preference is to take up only consulting assignments. Already we have done 3 projects. 2 in Nigeria, 1 in Indonesia, 4 projects we have already done with this PTR, and this is the 5th one, and now we are also negotiating another order from the same client. For the
this would be open book estimate?
No, we are doing consulting in overseas. They are not going for OB, they are going for EPC or PMC.
Okay. And in overall order book of yours, what would be the open book estimate? I presume close to 100% now?
Yes, yeah. Yes.
Okay. Okay. And sir, Dangote, how much is left remaining now?
As far as billing is concerned, 40% billing is just a second. This is the balance left. I think it's 500. Close to 45% billing has been done.
Okay. So
but the progress is different. Engineering progress is very high. Construction progress is low. So now construction activities are picking up.
Okay. So what would be the amount in the order book currently for this project?
Balance order book is close to 800 crores.
800 crores. Okay. And sir, lastly, probably Mr. Batra can address this. In the reported financials, the balance sheet, your reserves and surplus are coming down.
Yeah.
So is there any adjustment to this?
No.
Because even at,
Basically, in FY17-18, there was a buyback of shares. So around 659 crore we have paid as a buyback proceeds. So that's why the reservoir surplus has declined.
Oh, okay. Understood. Fine. Fine, sir. So that's from my side. I'll get back in the queue if there are more questions. Thank you, sir.
Thank you. Next question is from Dhananjay Mishra from Sunidhi Securities. Please go ahead.
Yeah, hello, sir. Sir, what is the write-off amount for this quarter? As you mentioned that 26.4 crore is for entire year.
Pardon?
So written off, in the note you have mentioned that oil and gas exploration blocks including dry well written off amount is 26.4 crore. So what is for this quarter?
It's around 22 crore.
22 crore this quarter. And this is related to PMC business or EPC?
Basically to our investment in the oil and gas block, basically.
Okay, so this is directly taken into this other expenditure?
Yeah, that is a part of other expenditure.
Okay. And sir, what is the outlook for FY19 in terms of total order inflow and domestically and overall?
We are looking at a big order from Rajasthan refinery project, and that's a very large order. We are looking at possibilities that we'll have both consulting and EPC orders from Rajasthan refinery project.
Okay.
Besides that, some of the projects which are being targeted for next 2 years are the Panipat refinery expansion from 15 to 25, the Kaveri Basin refinery of CPCL, this is a 9 MMTA refinery, and the Numaligarh refinery expansion. We are also looking at some mid-size orders from BPCL for small-scale expansions at their Bombay and Kochi refineries. Bina is also expected to expand from 7.8 to 15. Now, the timelines of these projects have not yet been finalized. Yes, the DFRs have been through, and they have been approved by their board. So we expect at least 2 of these 5 to 6 projects to materialize this year. And we can have similar order inflows in the consulting segment as we have seen in this year, and EPC segment may see a large inflows in the current year also.
So overall, can we expect about 4,000? Including EPC?
Yeah. Condition to Rajasthan materializing, yes, you can see an inflow of at least 2,000 crores in EPC and a similar amount in consulting.
Okay. And sir, have we signed MOU with Ministry for this year target?
That is being negotiated and finalized.
Okay, sir, that's all from my side. All the best.
Thank you. Before we take the next question, we'd like to remind participants once again that you may press star and 1 to join the question queue. Next question is from Bhavesh Jain from Envision Capital. Please go ahead.
Sir, this government is again talking about Namami Gange. So are we looking any order inflow for this year?
Not much. Not in the current year. We are not very clear of the model that they are proposing for Namami Gange. So we are currently not keeping much considerations for that in our order inflows.
Okay. And so this year we have taken this 22 crore write-off in oil and gas. Any such more write-off which is there?
Yeah, it can come. But that would not be material, basically.
Okay. And so earlier we were talking about some merger of other PSU companies with our company. So any update on that?
It was not a merger. The expression of interest was there for acquisition of PD.
Right.
And there was also talks about merger of...
Hello.
We seem to have lost the line for the management. Participants, please stay connected while we reconnect them. Participants, please continue to hold your lines while we reconnect the management. Participants, thank you for patiently holding your lines. We have the lines for the management reconnected. Over to you, sir.
Yeah, as I was sharing that there are multiple talks going on, merger of small companies, merger of companies with oil majors, and they are also floating UIs for acquisition of small companies. So, but still nothing material has happened.
Okay. And sir, any margin guidance for this year?
Margin for the consultancy segment between 25 to 28% or 30%, and for the turnkey segment between 5 to 6%.
Okay. And so the final question, will do another buyback this year?
No, we are right now we don't have any plan of buyback. Okay. As and when there is a plan, that will be implemented.
Okay. Thanks a lot, sir.
Okay.
Thank you. Before we take the next question, we'd like to remind participants once again that you may press star and 1 to join the question queue. The next question is from Jonas Butta from Phillip Capital. Please go ahead.
Hi, sir. Just two questions. So if you can highlight what is the status on the GAIL Kakinada Petchem Complex project? Is that FY19 or an FY20 prospect in terms of timeline? The second question was, for the last 2 or 3 years, we've had this tailwind of a provision right back in both our segments. Going into FY19 and 20, would those 2 years also, would also have a right back or a net creation? And if you can provide some bit of clarity on the quantum of that will be helpful. Thank you.
First, as far as Kakinada is concerned, the feasibility of this project is also through and board approvals have been there. We are not expecting this project before Q4 of this year. So it can come at the end of this year or it will go to the next year.
And the tentative size, sir, would be about?
Could be in the range of 1,000 crores.
And my
second question on contractual provisions.
Regarding provisions, basically are created as per the contractual provision with our clients. So, and are written back when all the obligation under the contract are completed. So it's a continuous process. Whenever there will be completion of a project, in case a major project is being completed, there will be a material write back. In case minor projects are completed, there may not be a material write back, but it's a continuous process.
So, sir, but based on your estimate, as in you would know that in F19, the kind of
basically estimate theory. So as of date, I cannot give you a figure. As and when that will be available, we can communicate that.
Sure. That is fine. Thank you and all the very best.
Thank you. Anyone else who wishes to ask a question may press star and 1 on the touchtone telephone.
Hello.
Next question is from the line of Chinmay Gandre from Future Generali. Please go ahead.
Yeah, thank you for taking my question, sir. Sir, our top line with respect to the consultancy segment on a Q4 basis, there was a marginal 4% decline. So we have a very decent order backlog. So anything you want to highlight on that front?
Basically, our turnover depends upon the execution in particular quarter. So in the last quarter of March 17, there were certain high value projects which were going to be completed. So there was a substantial turnover for that particular project in that quarter in comparison to the current quarter. So there is a minor variation between the Q4 FY17 and Q4 FY18 turnover.
Okay. Just as a follow-up to the previous question, Jonas asked, basically, is there any major projects which is expected to be completed in FY19?
See, it's slightly difficult to predict because, first of all contractual liabilities are to be over, completion certificates have to be taken from client, and he issues it only after all clarifications, disputes, issues, and all pending activities have been completed. So even we are not able to track from quarter to quarter when the client's clearances will be received from projects. But they do happen. The more you have large value contracts, the time when they get completed, you do get sometimes the material write-backs. But it is a normal process. We have write-backs in each quarter. Only when you get a large value write-back, we do report it.
Okay. So any top-line guidance for FY19 for consultancy and for turnkey, like broadly how much we will be able to do?
Basically, we are expecting an increase of around between 15 to 20% in the total turnover. Maximum will be coming from the turnkey segment.
Okay, thank you, sir.
Thank you. Before we take the next question, we'd like to remind participants once again that you may press star and 1 to join the question queue. Next question is from Bhumika Nair from IDFC Securities. Please go ahead.
Yes, sir. So I just wanted to check what is the status of, CPCL Nagapatnam, and also there was some talk of strategic reserves. So for both these projects, what is the status?
As far as CPCL Nagapatnam is concerned, it will go to the next year, second half of next year. That is what we are targeting. This year, the more promising ones are the Rajasthan and Numaligarh refinery, and a few small-scale expansions of BPCL may also come in this year.
So the BPCL, you're talking of the phase 2 Bina refinery from 8 to 12?
Oh, we are talking about Mumbai and Kochi. They are also coming up with few small additional units in their existing refineries. So these are small orders of, say, 150 to 200 crores kind of orders. As far as ISPRL is concerned, they are currently looking at only 2 reserves, one in Orissa for 4 million tons and second in Padur, phase 2. Phase 1 of Padur we have already done. Phase 2 of 2.5 MMTPA. Cumulative cost would be around 11,000 crores, and they are ISPRL is going for cabinet approval for the same, and parallelly they are also looking at PPP mode of execution for making these assets more commercially viable. So based on these 2 requirements which have come up, we feel it will come up in 1920 only.
Okay. And the Bina refinery expansion, phase 2, what is the status there?
Again, DFRs are through, but it is not being targeted for this year.
Okay, so that will come in, you think, in FY20, or it could get pushed over to a more longer term?
They are not coming in the first half of FY20.
Okay.
That's the current feeler we have. We can give you an update on each quarter.
Right. And the other thing was on, IOCL, various, I think you talked about Panipat, but are there any other plants where they're talking about expansion and also the Paradeep Petchem?
Not yet. Their immediate priority first was Panipat refinery, and CPCL, as you know, is also part of Indian Oil.
Right.
So they are looking at these 2. CPCL is 9 MMTP of Nagapatnam and IOCL is 15 to 25. So they are 2 big expansions, because in Panipat they are planning to have another petrochemical complex once the refinery gets expanded.
Okay. Okay. And so basically, in petchems, there are not any too many projects apart from the GAIL one that you spoke about earlier.
Yeah, because we are already doing one. We have completed BCPL recently and GAIL Vijaypur also. And HMEL has already started. So Kakinada was being planned for this year. We were hopeful it can come in first half, but as of now it is going in second half of this year.
Okay. The other thing was that you spoke about earlier was on the international pipeline that, the inquiry levels have started improving after a dull last 2 to 3 years. Apart from the Dangote order, nothing much has really come in. So you think that there could be, some larger projects of similar size like Dangote, etc., which could come in probably FY20, if not in FY19?
I can't say something like Dangote may come up immediately, but I can expect medium-size assignments start coming in the range of 50 million, $25 to $50 million.
Okay. Great, sir. Thank you so much and wish you all the best.
Thank you.
Thank you. Before we take the next question, a reminder to our participants once again that you may press star and 1 to join the question queue. Next, we have a follow-up question from Jonas Bhutta from Phillip Capital. Please go ahead.
Yes, sir. So this is in respect to one of the earlier questions which on the FY19 revenue guidance. So it suggests that, since bulk of the growth is going to come from turnkey, could you just explain on consultancy what are the challenges, as in what is our manpower utilization rate, and is there an upside there? And also, in an earlier call you had sort of hinted that you will look to hire temporary engineers to sort of address that challenge of flattish top line that or the capacity constraint that you have on the consultancy side. So, if you can just update on both these things.
Yes, currently the capacity utilizations are quite high in the range of 90% plus. And considering that the workloads are seasonal in our business, because suddenly you get very large assignments, and for the engineering phase workload will pick up, and for a few months you will have peak load coming in engineering. It's similar to peak shaving requirements that you get in power. So to manage that, we were thinking of going for sourcing of additional people in the engineering phase, and subsequently construction phase activities when they pick up. We have huge requirements in construction. So for both these cases, we are going for both recruitment and also sourcing of employees. Even for overseas operations, we will be going for sourcing of employees and direct hiring.
So wouldn't that then sort of allow you to grow your revenues in FY19, or that impact will only come in FY20?
See, it's not that the revenues will grow further. I'm simply giving an arithmetic calculations of the order book and how the order book is shaping up, and we need that manpower to execute that order book. So, for executing this order book and the projections in the top line we have suggested, we need additional manpower definitely, and so we are arranging that manpower. And since we need more of experienced manpower, so we thought we'll go in for sourcing of experienced staff as compared to recruiting more of trainees and then training them for 2 to 3 years.
Okay. So in a way, should we expect our consultancy revenues to hover around the 1,300, 1,400 crore band, maybe for FY19 and 20?
Yeah, for current 2 years, yes.
Okay. So, and your sort of neutral guidance on the margins also factors in that flattish top line, right? So, like a 25-28% EBIT margin for consultancy prices in the higher employee cost and stuff like that.
Yes.
Because yeah. Okay. That's it from my side. Thank you.
Thank you. Anyone else who wishes to ask a question at this time, please press star and 1. As there are no further questions, I'd like to hand the conference back to Ms. Bhumika Nair from IDFC Securities for closing comments.
Yes, I would like to thank everyone for being on the call and particularly the management for taking time out and answering all our questions. Thank you very much, sir, and wish you all the very best.
Thank you for hosting this conference, and thank you for to all the investors and analysts for their interest in Engineers India. Thank you.